Evening guys, and welcome to another Early Waves on Cryptos. In this weekly analysis today, we're going to have a look on BTC as always, and this week's vote from the Quora Inner Cycle team has been and is Ethereum. So we're going to have also a look at Ethereum. The two scenarios are very similar, to be honest. I mean, the long-term and medium-term counts are pretty much the same, but there is some difference from the low, recent low, like a few weeks back, if not mistaken, right? Around the 800 euros, $800, all the way up to where Ethereum and Bitcoin are currently. There is a bit of a difference in the structure. One looks corrective, one looks a bit more impulsive. We're going to analyze though what this means and where we could be heading next. We're going to see most of the scenarios that are probable, or the highest probability scenarios, because we cannot just look at all the scenarios. There are nearly, at least 20, I would say, with small changes and all that stuff. So without further ado, let's jump to the charts. Let's not forget that none of this is considered and to be considered investment advice, guys. It's purely educational to help you, to guide you through how you can use Elliott waves to increase your chances of success while trading. The analysis, of course, on this particular today is provided to you on my YouTube. For further analysis, further insights, on-chain reports, 2 daily videos, trading opportunities, and other, you can and should feel free, of course, to join. You can join my Discord community. There is a paid and a free version. You get some perks in the free one anyway, so why not just go down in the captions and join a small but growing community focused on Elliott wave analysis. So BTC, Ethereum, let's see whether we can keep it short this time. First of all, guys, you remember we were looking at the long-term count here, right? And I said this is a supercycle wave 3 going down for supercycle wave 4, and I had a lot of comments about this, a lot of disliking. How can the third be there? And the truth is that we're looking at BLX, by the way, right? The truth is, guys, that if we look at the volumes that TradingView or the index here gives us, right? I mean, the volumes only increase in the first wave, so it's nearly impossible to make any good sense on a third or on a fifth or whatever. We just assume that the first is the most explosive, and also the extended wave, which is the rarest case, right, out of the 3 upside waves. So I looked around, and there we go on bar chart, okay, and I have actually pulled out here the quarterly bars, guys, yeah, and we see, okay, it's Q3 2010, okay, and we see how the volumes actually, this looks like a very realistic view to me. And here's the thing, okay, if we look at this as 1 and 2, yeah, and that as 1, 2, 3, 4, and 5, because the volumes actually indicate such thing, then it means that this somehow supports the long-term count that I've been looking over the past few months. So I want you to see that these volumes over here are, this is a volume in wave 2, okay, fine. This is a volume in wave 3 of the first wave, and then these volumes, Q4 2015, are actually, again, the impulse to the upside after a second wave. The highest volumes we get are here. I know they are on the end of a third wave, but still, if you see, it's between these two, guys, that the third wave is. And how would you prefer to have this? 1, 2, and then 3, 4, and you would have 1, 2, 3, and then 4 and 5. It's nearly impossible because we have an overlap already here at the 19K, right? So the 1, 2, 3, 4, and 5 it's a more likely scenario because we don't need to worry about the overlap. Okay, so which makes this territory our wave 3. Okay, and also if you look at it as well, we have successive continuous move to the upside, especially closer to these 3 quarters, for example, 4 quarters, right? Whereas here we have one move to the upside that consolidated, then one move to the upside. It's a bit less rhythmic, if that makes sense. So impulses, I mean, can be both, but it's better if we have consistency in the expression of the wave, if the impulsiveness of the wave, that makes sense, right? So that brings us to this with volumes. Okay, confirmed. So I am personally more confident about this being a wave 3 and more confident about this being a wave 4. Now, as you well know, we have been looking at this as an ABC for a while now, right? But because of the corrective structure here, at least on BTC, you know, we were between this being an ABC and we're going to go up, or this being 1, 2, 3, 4, and 5, then we're going to see B, and then we're going to see C, and then from there we'll go up. So this is currently my main, although it's going to take a little bit time for us to confirm whether this is the case or not. Okay, before this, we're looking at this A, B, and 1, 2, 3, 4, and 5. But this becomes unlikely because the corrections in between this particular downside wave, apart from the fact that they don't match in waves, they are becoming a bit unsynced. Okay, so we want the corrections to be within guidelines. Okay, for that reason, we changed this to A, B, and C. Obviously, there are alternatives, and I'm going to have a quick look right now. But before we go there, guys, let's not forget. Let's go in here and BTC. This is our main, right? Let's not forget something very important. When we look at the full retracement, okay, this is 1, 2, and 3, supposedly, right? We have barely done 23%, okay, in one case. And if you look at it from just the wave 3 perspective only, we haven't even gone to 38%, okay, guys, and we're using log, do not forget that. So usually wave 4 does a 38%. Now, I'm not saying we're going to go up to 30, but it wouldn't be impossible. Okay. However, with the structure that we are waiting for, okay, or we are looking, it looks a bit less likely that this turns into a leg where we're going to see 30 come in, okay, because it looks very, very, very corrective. Now, I wanted to remind you just that according to guidelines, wave 4 can go to 38%. Now, the other guideline, which is actually based on the channel, is that we see the extension breaking outside in wave 3, usually the correction coming back in wave 4, rejecting, then 5th and go up. However, there is also the guideline where we break back within, and that usually takes us back to the median line, which is around 26K, give or take, okay? But again, okay, these two guidelines are based on Fibonacci's and the base channel. What we're mainly focused on is structure, and because we focus on structure, we are very likely done with wave 4 here. So here's what I'm taking you to the short-term count, and I'm going to show you the 1 hour chart. Okay, these variations, guys, are honestly, I mean, you cannot just say one is much more likely than the other, because we are at this stage again where high volatility adds a bit of uncertainty to our analysis. Okay, and that means, of course, that the main and the variation, the short terms that we're going to look, are close to one another. So don't be surprised if one doesn't happen, the other one most likely will. So as a W, X, and Y, guys, zigzag, flat, simple zigzag, and we are literally done, right? Because we have 5 waves up, so that's it. Now, one concern based on guidelines, actually I wouldn't say concern as much, is the fact that we went above 100%, okay? So supposedly that would be a better case to finish and then turn, but obviously this is very corrective. That's why we thought probably we're going to turn back up. we've done the 1272, not the 138, and we are far from 1618. Now, for us to start considering that might be a reversal, guys, we need to break at least 2662, at least. Okay, so until we get there, there is no reason to look at potential reversals as a main or close to a main scenarios, a main with a variation, let's say, right? So we've got double X, W, X, and Y. Okay, so A, B, and C, we're done, and we're moving lower down. Now, if we look at this particular move to the downside, guys, this looks like a clear 5-wave move to the downside, right? This is our wave 2 up here. Yes, because prices are actually, if you go down on the 15 minutes, first go up and then down. And this is supposed to be wave 1, 2, 3, 4, and 5. So this is an A, this is a B, and this is a wave C. That makes an ABC in wave 1. Wave 2, wave 3 ABC, wave 4, wave 5, and here we have a leading diagonal. Okay, so I'm suspecting a pullback up to 79% perhaps of this downside leg, which could bring us, who knows, around anywhere between just above 23k, and from there an impulse move to the downside. Okay, now this, as you can understand, is a 1-2, and we have 1-2 as well internally, which is a leading diagonal. So it's going to, you know, give us quite of an extended leg down here in the third, and it's gonna very likely help us go to the fresh low. Actually, we should be 1 degree higher, guys. I'm sorry, because yeah, that's gonna bring us closer to the bottom rather than not, because expect it to be well, at least from here to here, that's going to be 1 and 2. So approximately, you know, should go to 21k at least. So if it's an extended 20, you see, and that would be the third and the fourth, and then we're supposed to get the 3, the 4, and the 5. So that actually should be fine for us, and that is the correct labeling. So we missed one, but it's okay. So in here we would change that to minute, and this one is minuet. Okay, that's the right thing. Now you might say, and I actually agree, that 1 and 2, then you get 3 and 4 and 5. Okay, 1 and 2 versus the 3, it's okay, but the 4 and the 5 are very short lasting. Okay, versus the third or the first or the second. So yes, there would be a possibility that this is going to do something like this, and then we get wave 1 and 2. Okay, wave 1 down here. But I'm just looking internally that, you know, this is an ABC. Okay, so if we want to call this, if we want to make this an ABC, because it's supposed to be an ABC from up here as well, right? Then it just looks a bit weird, right? It does look a bit weird. So it's like we would have somewhat of a double X and Y in here, and actionary waves in ending diagonals cannot be double X and Ys, guys. Only the reactionary waves can be double X and Ys, and the simple zigzags. Okay, so here's where I think we are probably that actually, you know, as you can see, yeah, I think I've got this. Hold on, would that be 1, 2, then A, B, and C? Again, it doesn't make much sense. It looks like we're done here. So perhaps we're going to get, let me put it back as it was. Yeah, perhaps this is going to be some sort of ABC here as a flat, guys. Okay, expanded flat, I would probably say. And yeah, up to 23.70 would be a perfect situation, but we can also go lower. Yeah, we could go down to 22.50 to complete wave B. Okay, let's see how this is going to pan out. Now, obviously, guys, you understand that apart from 1 and 2, and because this does look a bit corrective, there is other structures, and there is also very nice and traditional head and shoulders here seen as well. Now, head and shoulders are not reversal patterns unless they are inverse head and shoulders. Head and shoulders usually bring 61.8 extension as a pullback and then continue higher. Okay, we came down to the 50% now, as you can see, and the 50% is a very important level, guys, because sentiment changes from down here. From the 26th of July up to today, we have been bullish, okay, and now we're actually flirting with turning bearish. Okay, if we turn bearish, then 2218 is next, which is very near the median line of this ascending channel, okay, and if we lose that, then the chances of us having this structure over here are going to increase. Otherwise, and yeah, that can be here, that can be here. Otherwise, guys, we need to look at the variations here, okay, which of course are all the way from down here, rather than just, you know, what we're looking as a correction. The correction in here is probably something like an A, B, and a C with an open triangle, or it could be a W, X, and Y, okay. And now, based on that, and if we're correcting, it means that we could be either in a wave 2 of a W, X, and Y, as you can see here, the white, yeah, W, X, and Y. And this is our A and our B. And this is going to be 1, 2. We're waiting for wave 2, 3, 4, and 5. Very likely going to get either an ending diagonal or a 5-wave impulse to the upside. I lean towards an ending diagonal, okay, because it would be preferable, and for bulls as well, to keep prices below 26.35. Otherwise, there's going to be, you know, a lot of changes in probabilities. So yeah, and the other case is the green one here, guys, which means that we are probably in an A, B, and a C wave is going to come in. This is going to be 3, 4, and 5, so we're in 4th wave instead. Or equally, we could have 1 and 2. That might be A, B, and C for 3. Then we get 4 and 5. Okay, so the green is this, or it could also be this. Okay, so it means that this is going to be an A, B, and a C for 3. Then we get 4 and then 5. So these are the short-term variations also for the BTC. So since we finished now this short-term variations, and also we saw the main, let's look at the variations of the main, guys. Okay, and you well know we talked about them quite a bit. Now, one of them, of course, is that we turned, okay, and if we turned, this is our wave A, in my opinion, then we're going to go up for wave B. Now, in this particular case, this is probably wave 1 and wave 2 as a flat. And then we have to call this as 1, 2. And either 1, 2, and we're going to get 3, 4, and 5 for 3, then 4, and 5 for A, then B, and then C. Or 1, 2, and this is going to be 1, 2 again. And then we'll get 3, 4, and 5, 4, and 5 for A, and then B, and then C. So these two are very close to one another. It's just that we haven't really seen what this sort of structure is turning to yet. Another case, yes, a bit more bullish. We're going to get a leading diagonal here as we see to the downside to the Bitcoin right now. And that's going to be like a correction, and then 3, 4, and 5. That would, if we turn into a leading diagonal over here, guys, in this particular area, then most likely, you know, there will be more chances that we end it down here, and this is the bottom rather than anything else, okay? Because the leading diagonal, it's going to give us an exponential move in the 3rd wave. Okay, no particular order, by the way. The other variation here in the long term, guys, is that you know, this is an ABC, and we are done down here. We have been looking at this particular structure for a while. It's just that I have problems seeing this as a 1, 2, or as a reversal signal. As I said, as I explained just a few seconds ago, it doesn't look impulsive at all. It looks corrective. Okay, so but still we have to acknowledge that this is a potential move. Now, W, X, and Y is something else we need to look at as well, which means we're going to be very close to our particular scenario that we're expecting anyway, without getting the 5th wave down before we go up in wave B. Okay, and another one is the one that we have been looking for months, the expanding flat, which is the WX and Y, which means that the 4th wave is finished again and we're going to move up. Obviously, this is not going to be known for a long time, guys, which of the two. If we're down here, I mean, it will take a long time to validate and confirm which one is actually the right count. And the other variation in the longer term as well, you know, it's where this is indeed the wave 3, and we're gonna see it like a WX and Y, which means we ended down here again and then go all the way up. Okay, so this is for BTC. Now for Ethereum, you're not gonna see much different stuff here, but in the short term you will. So let's see where we are first. We're in the main, fine. Our main is exactly the same, guys. Okay, so we've got 1, 2, 3, 4, and 5. Now, in this case, when we pull the Fibonacci from the top all the way down, you see that we have already done the 38%. Okay, so that's one thing to remember. So, according to guidelines, we actually turn with a false break if this is the end. Okay, now the other thing we need to remember is of course the channel, and if we look at the channel, we haven't gone up there yet, so only one of the two guidelines is respected so far. Okay, if we go to 1960, okay, nothing changes. We still are well, around 1960. We're going to have a second guideline being reached. We still are below wave 1. That still remains a case where it is a wave 4, and we're going to move lower down. Actually, even up to 2065 and even 2055, that still remains a case where it can be a fourth wave, a valid case. Now, although we have to acknowledge that this move over here looks much more impulsive, and there is progress. There is no overlap between the first swing to the upside and the second. Okay, there is no overlap here, and we can clearly see it. Okay, so it's a bit more bullish. However, it hasn't yet exceeded the level I'm expecting it to exceed to turn the scenario to something more bullish. Okay, despite that, let's look at the long at the shorter term here, right? And let's just see what the expectation is, and which is not as similar to BTC. Yes, it could be the case for BTC as well, because we have somewhat of a corrective looking move, but it could be 1, 2, 1, 2. But the case for Ethereum is a bit different. Yes, my main is that this is an A and a B. Okay, and we're going to see here an ending diagonal, guys, and then we're going to fall. That's going to be our fourth. Now, why do I expect it? I expect this because the guideline is done. Okay, and I don't expect the upside to be much further to what we currently see. So the ending diagonal, if another wave to the upside coming close to this diagonal trend line is around 2K, who knows, is actually a very good candidate. Okay, now what else though is the issue with this count? Okay, it's not actually an issue, but 1824 is where things are gonna become a bit more bullish. Okay, so yes, we could see an APC here. Just get a fresh high above 1780. Don't go above 1824, or don't close at least a daily session above 1824. Then that is fine to drop. But while we are making this assumption, we cannot ignore facts. Looking at the channel, we returned back within. It was a false break. We tried to go back within. We are currently seeing a rejection of the channel. As long as we are above this channel, which is the base channel, this move is accelerated. And if we look at the Fibo, it's just 23 Fibonacci cluster as well. We didn't even do the 38 or the 50. Okay, so even if we go down to 1338, we still remain biased to the upside. However, for this particular account, because this is supposed to be contracting diagonal, we cannot go below 1460. If we go 1460, our wave 4 is going to be bigger than wave 2, which means this is an invalid scenario. Now, the other case, as you well know, we might set 3 here, then 4, and then 5. So that's going to give us a higher price, probably above the 2K. Okay. Don't forget, our wave 4 is around above 2K actually. So going back here with the previous wave 4 as well, because the 4 and the 4, this is another Elliott wave guideline, it's possible. Okay. Now, this is the main. There are different variations. We're going to look at the ones that I believe are likely to play mostly. First, we could be on a W, X, and Y, which means this is ABC, and we could finish here. Now, the issue I have with this count, and that's why it's not my main, is that this move down here, guys. I mean, if we finished here in any sort of way, that means that has to be a leading diagonal, because there is no way this can be read as wave one. There is no wave one in here, guys. Okay, whatever time frame you look at, this is A, B, and C. There is no 1, 2, 3, 4, and 5 in here. You want to go down even in 15 minutes. There is no 5-wave move. You see that? It's an ABC. So we've got to keep that in mind. That's why I'm expecting one more leg up, because this is a beginning of a corrective wave. Okay, but just in case, it has to be a leading diagonal, and even that may be not possible. Okay, we'll have to go and dig in and measure the one and the other, and where is this and where is that, and give truncations. It's a bit forcing it. Okay, so if we did force it, there is a scenario where we have a W, X, and Y. As I said, we're done. Yeah. Or we have a 1, 2, 3, 4, and 5, which means we are done. However, it will be done with wave A. Then we'll get B and then C. But starting with a W here again, it will have to be a case where this is a leading diagonal. So the green one is a bit less likely too. And the red is a bit less likely. What is a bit more likely is that this is wave 1 and this is wave 2. This is 1, 2, 3, 4, and 5. Thank you very much. No overlap. That's going to be a W, X, and Y with an extended Y. Who knows when I get the fourth and then the fifth. And that is going to then be wave A. Then we're going to get wave B, and then we're going to get wave C. So we could go back to 2K, back to 1K, and back above the 2K again before we fall to a fresh low. So, you know, a bit unlikely. Actually, the longer it takes for a pattern to confirm, the less likelihood we have to give it, guys. And this is how it works. That's the process. Okay, so these are also the different variations in the short term. Now, when it comes to the variations of the longer term, guys, we are very same as, you know, exactly the same alternatives as we have in Bitcoin. It's just some of them have a bit less likelihood than others, because this is indeed a bit more bullish. But as I said before, I like to use the 1618, okay, as a level where there's no rule or guideline, by the way, but as a level where things become more impulsive, which means I could change this to an impulse. And if I change this to an impulse, don't forget 1, 2, 3, 4, and 5 might be the first wave, or A, and then we'll see B and C, or 2, 3, 4, and 5, if of course it's a reversal based on the longer term alternatives. So that's going to be all for this week's Elliott Waves on Cryptos video. Guys, thank you for watching. I hope you enjoyed. Leave questions, comments. Don't forget you can join Discord for free. If you're into more trading, you can also check out the subscriptions. Enjoy the rest of the day and take care.